Hey, what's up, stock compounders? Brad here. So it is that time of the week for our weekly Q&A. We've got a bunch of questions today. I'm probably not going to answer all of them. If I skip your question, it's not because it's a silly question or I didn't like the question. I might just not have much of value to contribute to that particular question. So don't be offended. All right, let's jump into the questions for this week. Hello, Brad. I discovered your channel a few months ago. Really enjoying your content. Awesome. Thank you. Do you know of any great value investors in Europe or mainly interested by European stocks? I invest in Europe primarily, and I've had a hard time finding great gurus to shamelessly clone. That's a great question. I'm not very familiar with gurus, super investors in Europe. I don't really buy in Europe. But you know what I'm going to do? I'm going to send a tweet to my community on Twitter, and I'm going to find out which gurus people follow that are in that European market, okay? And if I forget to do that, ping me on Twitter, ping me on LinkedIn, because I am curious about that as well. So thank you for that question. After dinner investor, how do you spend your time as an investor? Are you reading books, annual reports, watching lectures? Do you treat it as a job with set hours, or is it more of a lifestyle whenever there's time? So at this stage of my life, I have two very young kids, 2.5 years old and like 7 months. So it's really whenever there's time at this point. And in terms of what am I doing, it ranges from figuring out what other great investors are buying, trying to dig in to each of those businesses to see, okay, is there enough here that I can understand that I want to go deeper? So it's really a lot of different things, which keeps it interesting for me. But yeah, I don't have set hours. It's not something I'm treating, with 8-hour days, 5 days a week, anything like that. It's really whenever there's time, and it's whatever I'm curious about that day. Okay, it's really fluid. And that keeps it fun and interesting for me. Thanks for that question, After Dinner Investor. Nicholas, how seriously do you work to keep costs low in investing? For example, taxes, brokerage fees, etc., or are returns your only focus? So it's pretty important to me to keep expenses low when I'm investing, because each of those expenses I figure is going to compound over the next 30, 40, even 50 years. So, doing that little work up front now to be as efficient as possible with costs in investing, I think is really going to pay off down the road. So, for example, taxes. It's rare that I sell anything less than a year holding time, okay? Because I want those long-term capital gains as opposed to shorter term. In terms of brokerage fees, it's great that Robinhood has forced all of these brokerages to do away with the trading commissions. So I don't have any of those. Costs are much lower today than they were even a couple of years ago, which is awesome. But yeah, the big one I would say is the taxes, holding stocks for more than a year, ideally, a decade or more, if you can find great companies at the right price that allow you to ride that jockey off into the sunset for decades. But that's fairly straightforward. Most of my focus is definitely on, how do I pick the great long-term compounders and really, maximize my rate of return over time. Do you have plans to run for California governor? Hell no. Politics. So I feel like in politics, it's so much about, what do other people think, right? That's so much what drives politicians. With investors, particularly value investors, you can't really let yourself care what other people think, all right? Because if you're just doing what the herd is doing, you can't really outperform, okay? So in a lot of ways, my whole orientation is very opposed to being a politician. So I have no interest in that ever. What do you think of investing in small cap? And can you arrange a Zoom call to all your loyal subscribers for an hour? Probably not on the Zoom call. However, every week I do Punch Card Investing. It's a channel with 4 other YouTubers. It's live streamed. So if you guys have specific questions, find us in California. It's 7:30 p.m. on Friday night, every Friday night at 7:30. So, find me there. There's 4 other real smart guys as well who can answer your questions. So that's what I would suggest for that. But yeah, small caps and micro caps, I definitely find myself gravitating towards smaller and smaller public companies. I think the return potential is much greater when you get smaller. It can be more difficult to project out cash flows when businesses are smaller, but I do find myself gravitating towards the smaller end of the market as I go along. What do you think is Andrew Rosenblum's newest position? Q1 2021 letter from Bonsai Partners, for those of you who don't recognize the name Andrew Rosenblum. Also sad to see he's probably not going to post these anymore. It is sad. So Andrew, it looks like he just created a new fund structure, and it sounds like he may not feel as free to post investment ideas moving forward. I have no idea what his position is. In that letter, if you guys go read it at Bonsai Partners website, it's listed as an anonymous company, right? He's not ready to share the name of his newest acquisition. And it's a significant position. I think it's like 15% of the portfolio. But I don't know what it is. There's rumors that it's some Chinese company. Let's pull this down and we can find the name. There's rumors that it is, where is it? Maybe, I don't know where it is. Okay, yeah, I don't know. If you search Twitter for Bonsai Partners newest position, I think something will come up, but since I can't verify that that's actually the business, I'm really not interested in spending much time looking at what that hypothetical purchase might be. If you could buy shares in each of the guru's funds, would you buy shares in companies and or the guru's funds? So I would buy shares, right? I would clone the actual stock positions rather than just buying into the fund. It's a more interesting game to me. I think that's kind of the simplest way to explain that. I want to be concentrated. I want to have about 5 positions in my portfolio. And I'm not super interested in kind of owning a basket of stocks that a guru has chosen. John, do you think that the burst of the bubble is imminent? So, yeah, that's an interesting question. You guys should check out Howard Marks' latest letter from Oak Tree. It's not clear to me that we're in a bubble, okay? Or certainly that the bubble is about to pop. Monish recently, I think in his last talk, said he thinks there's a kind of a small subset of U.S. companies that are in a bubble. Tesla, GameStop, the popular Robinhood stocks. There's a bunch of IPOs that fit into that basket. But by and large, public companies in the U.S. as a whole, I don't know that we're experiencing a bubble. In addition, I don't spend much time thinking about macro themes like that, like where we are in the market cycle. I'm really looking at individual companies where I can identify, a nice margin of safety and a long runway for the business. And those can be found in any market environment. Granted, it's easier to find those when the market has come down, because there's just a lot more businesses that satisfy that margin of safety. Whereas when you get up, clearly we've had quite a run up since 2008, 2009. So it's harder. It's harder to find companies of the nature that I'm looking for, long-term compounders that I can buy with a bit of a discount to what I think they're worth today. So, but again, I really don't spend much time thinking about, when is the bubble going to pop? Because to me, that's just something that's not knowable. And I think my time is much more valuably spent looking at individual businesses. Yeah. How do you structure your portfolio and how do you determine your position size? So the way my portfolio is structured, I really I'm waiting for fat pitches, okay? Waiting is probably too passive. I'm constantly trying to educate myself, expand my knowledge, understand a variety of businesses. But when a fat pitch comes along, I want to drop about 20% of my portfolio on that position, okay? I want to have 5 high conviction bets in my portfolio. Now, it's not always going to be 5, but that's kind of my, ideal, is to have about 20% bets. And yeah, position size, 20%, really just based on how concentrated I'm personally comfortable with, which is about 5 positions. Yeah, I think that's it for that one. Satisfying moments. Love your videos. Thank you. Have you found the new NVR, to quote Pabrai, which means a great business with big buybacks? If so, could you please share it with us? I have not found that yet. Okay. And honestly, I'm not putting a lot of focus on Uber cannibals, companies that are buying back their stocks in great numbers. There's so many different ways to find the next great business, right? And Uber cannibals, heavy buybacks just isn't at the top of my list of attributes to look for. Not that there's anything wrong at all with that attribute. It's just not where I'm focused. So, but no, I haven't found any compelling companies that are aggressively buying back their own shares. David, how much time during the average day week do you dedicate to your investing practice? When thinking about your practice, what percentage of that time is spent on looking at companies directly versus other pursuits? Whether that's studying what super investors are doing, reading about a new industry, or otherwise. Now this ebbs and flows quite a bit. Right now, I'm more spending my time studying what super investors are doing, really diving into attributes of 100 baggers. So reading the book 100 to 1 in the stock market, reading Nick Sleep's letters to really wrap my head around the scale economy's shared business model. And I think a large part of that is there's been a bit of a shift in my framework that's kind of followed Monish Pabrai as he's had a recent shift. I mean, I'm a shameless cloner, right? So I actually feel like I want to spend a little bit more time looking at individual businesses and really getting into the weeds at the business level. So actually just today, I made a list of about 10 companies that I really want to dig into. Because it just feels like, high level studying 100 baggers, what other super investors, it's not quite as satisfying to me as really sinking my teeth into a business, a real business. So my energy is going to swing pretty soon to spending a lot more time on individual businesses. Hopefully that helps. Brad, are you a full-time investor or do you have a day job? So I am not a full-time investor. I'm kind of at a weird point in my life where I have two very young kids. We're just kind of coming out of this pandemic. So I've basically been on paternity leave for the last year or so, which has been awesome. It's been giving me a lot of time to devote to this YouTube channel and to studying investing. But yeah, my day job is technically landscaping, so I'm really into permaculture, which is short for permanent agriculture. It's a system of design for, growing food, building shelter, all of these things that are resilient, that can be sustained indefinitely. So check out permaculture if you guys are interested at all in sustainability. It's a really cool field. So that's what I do. Landscape, kind of sustainable landscaping, food forests, that kind of thing during the day. With all this talk of inflation, are you taking any steps to rearrange your portfolio, such as exposure to gold or buying more into consumer staples, discretionary, or sticking to cash? All this hype is truly exhausting. So I'm not really doing anything to rearrange my portfolio to prepare for potential rising inflation. It does seem like there is rising inflation. It's happening now. But it hasn't really impacted my approach to investing. I'm certainly not buying gold or these consumer staples or stockpiling cash. I'm not doing any of those things. And with the hype, I mean, this is really on us as investors to consciously choose our environment. Okay. And I have trouble with this as well. But designing your environment, your office, or wherever you do your investment thinking and investment work, to really design it so that you're controlling what's coming in. Okay, you're actively choosing what you're consuming, rather than just flipping on the TV or YouTube or whatever it is and letting whatever's out there just bombard you, okay, indiscriminately. I think it's really important. Guy Spear talks about this. Monish talks about this. Warren Buffett talks about this. Nick Sleep talked quite a bit about this. To actively design our environments to be better investors. Okay, because there's so much noise out there, and I think it's really important in order to optimize the energy that we have each day to focus on the things that are really important, that are going to move the needle in our investment portfolios, to not have that constant barrage of noise. So, if you're exhausted by all this inflation talk, maybe you need to cut out some of those channels, right? I think that there's a lot to be said for that. Jack, would you ever buy a rental property? Absolutely. I'm pretty sure I will own a rental property, probably at some point within the next decade. I like the idea of owning cash flowing real estate. If I had to guess, it's probably going to be like a multifamily apartment, maybe on the smaller end to begin with, 10 to 20 units, something like that. There's a lot to know. Okay, I have a friend who just bought a number of properties, kind of out of state in Memphis and maybe in New York, somewhere in not New York City, but kind of outside of New York City. And I think a lot of people who get into real estate investing probably don't know as much as they should before they get into real estate investing. There's so many nuances to understand. It's true with any area of investing. It's amazing how much time people spend accumulating money through their jobs, right? 40 hours a week in a lot of cases, and how little time people putting that money to work in investments. Due diligence, guys. It's It is absolutely essential. So yes, I will buy rental property, and I'm gonna have to do a ton of work before I'm really comfortable pulling the trigger on something in real estate. What are the best resources to learn about financial statements and ratios? Well, so this really depends on how you're wired, right? How you learn best. For me, what I like to do, there's a business I'm really interested in. I've found a great write-up for it, and I'll look at that write-up and I'll have the financial statements from that company as well, and I'll kind of cross-reference them, right? I'll go through the write-up and I'll learn effectively how to read the financial statements by deconstructing the investment thesis, the investment story. So it's probably not as efficient as it would be if I were to just go through a course, like an accounting course or a course with Aswath Damadran, for example. But it's a lot more interesting and fun for me to do it that way, to kind of reverse engineer the investment case by reading the financial statements that way. So there's no right and wrong way to do it. Whatever seems interesting and fun to you, I think, is the way to go about it. I don't know that there's a wrong way to learn how to read financial statements. How do you compare new buys compared to top holdings of super investors? This is a great question. For example, is buying Micron still viable if Pabrai, Li Lu, David Tepper still choose to hold them as a top holding? So I think with these particular super investors, there's a big difference between at what price they're willing to buy and at what price they're willing to sell. Okay? So in my opinion, Micron, none of these investors would be buying Micron at current prices. A lot of them got in the mid 30s. I think Micron is in the 80s now. I haven't looked at it super recently. But I just don't think they would be interested in buying at current prices. So when I look at 13F filings and recent super investor activity, I'm really always looking for new buys or positions that have been added to in the last quarter, or at least the last couple of quarters. So just because a position is, the biggest position for an investor, take Warren Buffett and Apple, for example, or take Li Lu and BYD, okay? I certainly don't think Warren Buffett would be buying into Apple today, and I really don't think Li Lu, in fact, I know Li Lu wouldn't be buying into BYD today. So again, big difference between having a high conviction position and having that high conviction position be at a price that makes it a compelling investment to be buying today. So that's how I think about it. Rasmus, hi Brad, any thoughts on Norbert Liu, Punch Card Capital, and his investing strategy? I haven't really looked much into Norbert Liu. If you guys, have any thoughts about Norbert, I don't even know what his track record is. I know he doesn't do things very much in his portfolio, similar to Charlie Munger. And I certainly don't hold that against him. But he's not a guru that I've dug into yet. So if any of you have any compelling reasons why I need to look at Norbert Liu tonight or immediately, let me know in the comments. NVR, though, fantastic. That has been just a great performer over the last decade and more. Hi, Brad, would love to know more about your process of screening a certain stock. Do you reference Yahoo, Morningstar for the financials? Do you use any tools or have your own spreadsheets for this? Yeah, usually the way I look at the financials, I either look at the annual report or the quarterly reports to look at financials, or I look at Ticker Terminal, okay? It's free, it's in beta. At some point, they're probably going to charge for it, but right now it's free. If you guys want access, ping me and I will give you a link. I don't get anything for it, but I may at some point in the future. I really like how Ticker, just how it's organized. It's very kind of intuitive for me. And I can look at companies outside the US on ticker, which I have a really hard time. Usually I can't find them on Morningstar or Value Line. So ticker is great for those. And then in terms of tools, I have a simple kind of discounted cash flow spreadsheet that I use sometimes. But the more I do this, the more I get into this, it's really just a couple metrics for each business that are going to move the needle over time. So I think the key is identifying what those are, what metrics are going to indicate to you if the company is getting better over time or if it's kind of losing ground over time. So that's a lot of the work I think that should go into investment research, stock research, is understanding those couple levers. Yeah, thanks for the question. How do you deal with the volatility of the stocks in your portfolio? I know that I own quality businesses. However, when stock price drops 40% from my buying price, I get pretty nervous. Yeah, it's tough. It's one of the things that makes investing so difficult. And I think the thing that really helps me is I look at stock prices as being delivered by, this, what Benjamin Graham talked about as this manic depressive Mr. Market, okay, that, has these wild mood swings. If you look at the market as, okay, this is wisdom, the market is telling me what this business is worth, it must be true, then you're an efficient market hypothesis believer, and you should probably just be buying index funds, okay? But if you believe that there are, businesses can be bought for a significant discount to what they're actually worth, then, if prices go all over the place, I mean, you understand that that's what the markets do, right? That's the nature of the markets, to get euphoric and to get very fearful, to overshoot on both sides what the business is actually worth, what a fair price for that business is. And the better you understand a business, the more conviction you have in what that business is worth, I think the less impacted you're going to be by the price swings of Mr. Market. So that's how I deal with volatility. Volatility helps me realize very quick which companies I have confidence in, that I understand, and that I want to hold for the long term. So there's a lot there. It's a tricky thing. It's even the best get tripped up by quickly dropping prices. It's a very difficult thing to deal with. Hi Brad, Nick Sleep has said that investors often pay too much attention on information that can be measured, financial statements, but should focus more on the wealth of information in areas such as product integrity, market share, management characteristics, etc. How do you go about focusing your mind on these aspects and not getting too caught up in the accounting figures? That's a fantastic question. So Nick Sleep is very new to me. I've just been reading through the Nomad partnership letters within the last month. Historically I've been very much focused on financials, quantitative metrics for businesses. But yeah, definitely as I'm learning more from Nick Sleep and Monish and learning about 100 baggers and how to go about identifying those, there's a lot more kind of attention shifting to the qualitative aspects of businesses, brand, and integrity, quality of management. Obviously quality of management can show up in the financials as well, but there's other things to look for. So I don't have any super insights to offer on this particular question. It's an area that I'm really just is opening up to me for the first time. But I think some of these high level questions, like, where is this business going to be in 10 years? How big is it going to be? How much of the market share is it going to have? How how competent is management to make capital allocation decisions that are going to get this business to the promised land. These kind of high-level questions aren't often supported by quantitative metrics. So we've got to kind of go deeper. And if we're asking the right questions, it's going to lead us to, to know what to look for in these kind of soft characteristics of these businesses. So that's just my initial take on that. Hi, Brad. Always good to watch your videos. Awesome. Thank you. What's the best way to find out capital allocation decisions of management in financial statements? I think the best way to do that is to read back 5 to 10 years of annual reports. Okay. Look at what management says they're going to do. Are they going to do share buybacks? Are they going to do acquisitions? Are they going to reinvest into growth in whatever ways? Figure out what they say they're going to do and what they've actually done. And, if they've owned up to mistakes, if they've done what they've said they were going to do, if they haven't, why haven't they? It's really just understanding a business over time is where you start to see the trend of those capital allocation decisions. And hopefully management is directly talking about this in the annual reports, giving you the same information that they would want if they were in your shoes as a shareholder. There's not really one answer for that. You've got to understand the business in order to kind of parse those out. Hi, Brad. What other gurus do you track that are not on Dataroma or don't issue a 13F? So Alta Fox Capital, Connor Haley is one that I'm following. There's a guy, Michael Mitchell, who is on Twitter. Jeremy Raper of Raper Capital is on Twitter. I just mentioned Bonsai Partners, which may be harder to track now that there's been a different fund structure, unfortunately. But yeah, there's a number of people I follow on Twitter. Elliot Turner of RGA Advisors, I believe is the name. So yeah, that's where I mostly track them is on Twitter, and those are a handful that I've been getting into recently. Wondering what your track record is so far since taking investing seriously. That's a great question. And it's a great nudge. It's a great moment for me to share. I, don't follow what I do because of my track record. I've only been investing for about 5 years now. And I don't even know what my track record is. Okay. I haven't calculated what my returns have been in the 5 years. In my mind, I'm really still at the very beginning. Okay, I'm drinking from the fire hose. I'm really learning, what kind of investor am I? What is my strategy that really fits with my personality and, the way that I want to kind of move through the investing world. So I don't know what my track record is. I'm not here to present as some kind of guru. Like I've been generating 25% annual returns and you guys should, buy everything that I say you should buy. That is not what I'm doing here. This is really an educational channel. I'm sharing my journey, educating myself as an investor. So, but it's an important question. I think, if we're gathering investment knowledge, investment information from someone, it's important to ask, well, does this person know what they're talking about? And it's a great way to find out if they know what they're talking about, to look at their track record. But anyway, that's what I'll say about that. How have you applied the value investing compounding lessons you have learned to your life outside of investing, and in particular raising children? Whew, okay, that's a different question. Compounding lessons. Yeah. Well, one of the things is I think one thing I've really learned is even through this channel, right? This channel isn't my investing portfolio, right? It's turning into a business of sorts. Right now, it's kind of a side hustle, but I could see it being a business. And one of the things I've learned is don't get so caught up in making a quick buck. Okay, it's really important to focus on quality, focus on doing the little things well each day and staying the course, having that perseverance. Because that's really where the rewards show up, years down the road. Because in anything, right? Starting out, it's going to feel really slow. Like that's just kind of how it works, unless you get really lucky and you strike it rich in something right away. But typically, skills are built kind of one day at a time, very slow, and it's hard to see much difference in the early years, the early stages. So that's one thing I've learned is just to slow down, to be patient, to really play the long game. Okay. And yeah, I'm sure there's a lot in there. I could talk about that for a whole video, but playing the long game, I think, is super important in pretty much every area of life. Not being in a hurry. Because again, I'll just say one more thing. It's really not about the destination, okay? The destination for every one of us is the grave, okay? We're all going to die. So I think it's silly to be so focused on getting somewhere, right? I mean, life is all about the journey. Life is now. Life is the struggle. It's the hustle. It's doing the things that we do each day. So if that's not feeding you, if that's not inspiring you, it's probably not the right thing. I hope you're doing well. I am. Thank you. Thank you for the great content. Yes. I have 4 questions. Ooh, this is like a Berkshire Hathaway-esque series of questions here. Since you are an ardent fan cloner of Pabrai, could you please give an insight on why you prefer Monish over other investors? So I'll answer that real quick. Monish Pabrai puts out a ton of content, okay? So, and he has a great track record, right? Since he began the fund, since he started investing in 1995, particularly in the early years, he just crushed it. So the thing I really like about Pabrai is because he puts out so much content, I can really get in his head and see his investment portfolio, see his investment moves much more clearly because I can kind of, in a sense, download his framework for how he sees the world. So that's really compelling for me. What has been the return to your Monish Pabrai cloned companies? Well, I don't know exactly, but I'll tell you a few. So Fiat Chrysler, I think I kind of maybe broke even on that one. I got in after the Ferrari spinoff, so missed out big time on that one. Graphtech, I lost money on. And then Micron and Seritage, I'm up pretty good on. Yeah, so I don't know exactly, but I think overall I'm doing pretty well. And then, obviously Alibaba I just got into, which wasn't really a Pabrai clone, it was a Charlie Munger clone. So what are the things that you scrutinize when you clone Monish purchased shares? What do I scrutinize? Well, I really want to understand the business, right? I want to understand, what do I think the margin of safety is? Where do I think it's going in the next 5 to 10 years in terms of a business? But because I really understand Pabrai's framework, it makes it easier for me to see the business, look at the business through the filters that Monish Pabrai uses. Yeah. As a novice investor who wants to clone Monish, what are the things I should be careful about? Well, if you're going to clone, now there's different levels of cloning, right? So if you're going to clone without really understanding the business, I think it's super important to clone on the way out as well, okay? Wait until Pabrai exits to sell off a position. Don't let your emotions get involved. Don't let yourself think, oh, Monish is probably sold out, even though it hasn't shown up on his 13F. So, be careful. Really put a lot of thought into how you're cloning. And the big thing you got to watch out for is, am I getting out of the way of making bad emotional decisions in my investment portfolio through the process that I've set up, okay? You've got to make sure you're not your own worst enemy when it comes to the returns and the decisions that you make in your portfolio. So that's my biggest caution. Don't make emotional decisions. And you got to have a structure in place, a system in place to avoid those as much as possible. Do you ever consider the problem of commitment bias when talking about companies you hold or positions you have bought publicly on the channel? Absolutely. Absolutely. And honestly, guys, I think I'm going to be talking less about positions that I'm buying into, okay? And I've talked about this recently. Charlie Munger talks about how when you put out what's in here, you're also drilling that in, okay? You're reinforcing, the way you see the world when you kind of shout it out, or when I make videos, for example. So when I buy a position, I'm really only interested, I already have the bull case in my head, right? Because I bought it. I'm really only interested in talking about what's wrong with that business, or why it might not be as great of a business as I initially thought it was. So that's one shift you guys are going to be seeing. I mean, I'll probably still share when I buy into positions, but I'm not going to go deep into why I like the company, okay? I'll probably do some videos where I try to invert the story and talk about why I shouldn't have made that investment, even if I still own it. So, yeah, I think that's important. And yeah, Nick Sleep, I've heard both Nick Sleep and Charlie talk about that. Kathy Wood, I don't know. Yeah, I mean, the amount that she talks about her positions, there's got to be a ton of commitment bias there, unless she's a mutant and isn't susceptible to that for whatever reason. How often do you screen for stocks and dig into a company's financials? Well, I've been doing quite a bit of screening over the last, say, 6 months, just because I'm, again, trying to refine my investment process, figure out which screens really seem to work best for me. How often do I dig into a company's financials? Fairly frequently. Not that frequently in terms of going real deep. Okay, I'm pretty quick to give a pass on companies, and I think that's really important. But when something comes along that's like, okay, yeah, I this is worth spending a solid chunk of time on, then I'll go into a company's financials. And that's probably only maybe every couple of weeks that I'll do that, sort of a deep dive into a company's financials. Big fan, awesome. I wait for your content every day. That's fantastic. One particular stock has grown to 50% of my portfolio. I would like to trim this position as I think the stock has reached its intrinsic value. And I am missing out on other opportunities. Okay, from your perspective, what would be an ideal size percentage of a position in a portfolio? Well, it really depends on the business. If it's a stock that you think is getting better since you bought it, I wouldn't worry so much about the price appreciating, okay? And I mean, a stock that's already in your portfolio is probably a business that you're going to understand quite a bit better than any positions that you're considering getting into. So one of the things Monish says related to this is the mistress is always hotter than the wife, okay? Because, we see all of the flaws in the wife, right? We live with the wife. We know everything about the wife, both the positives and the negatives. With the mistress, all we see is the surface, right? And maybe that's pretty alluring, okay? But we don't see all of the things that maybe aren't great about the mistress, right? We don't see the warts. We don't see the black spots on. We don't see how the mistress, the flaws, the faults in the mistress. So, I would take that into consideration. And I don't, if I bought into a company, say 20%, right? I wouldn't be thinking about trimming it unless there wasn't kind of a steady flow of capital into the portfolio, which there is for me, right? Because there's income, okay? So a 20% position today, doesn't mean I can't have another 20% position in 6 months from now with new capital that's flowed into the portfolio. But, if I had a business that I liked, and this is something that Charlie Munger talks about, unless it's egregiously priced, I don't care about fair value. If it's egregiously priced, like 100 price to earnings or more, something like that, unless it's Amazon, then 100 price to earnings is par for the course with something like Amazon. But that's how Charlie Munger and Pabrai are thinking about this. If it's not egregiously priced and the business is getting better, I'm leaving it alone. Okay, so that's. But if it wasn't a long-term kind of position to begin with for you, if it was one of these discounted buys, buying $1 for 50 cents and it's reached intrinsic value and you think it's run its course, then that's different. Then maybe it's time to get rid of that and plow that capital into other opportunities that maybe have more potential for growth. So those are my thoughts. Thank you for your great content. Absolutely. Any thoughts on poor performance of Zig Fund, Acquirers Fund, managed by the author of The Acquirers Multiple? By the way, Tom, my buddy Tom, Investing with Tom, is going to be doing a video with Tobias Carlisle. So check that out. I'm sure most of you guys follow Tom already. It's probably how many of you found me. But does this suggest that we should not focus on so-called acquirers multiple metric? If you were put in a position that you must put your money in some kind of fund or ETF, would Zig make your shortlist? Do you have in your mind any other funds or ETFs to consider? Except the S&P. You don't want me to pick the S&P. So I haven't looked into Zig. My sense about Zig is I wouldn't be pleased with the management fees, right? I haven't looked at that one. I'm not super interested in ETFs. I really haven't looked at many ETFs just because I like the game of picking individual businesses. I like Acquirers Multiple. I think it's a great measure of how cheap a business is. If I had to put my money in some kind of fund or ETF, probably what I would do is I would look at which countries seem most undervalued, seem most beaten down, okay, orphaned, such as South Korea, Japan, Turkey, maybe. I mean, a lot of these countries that Monish Pabrai is investing in. And I would look for a low-cost ETF to try to capture that emerging market in a cheap way. But I haven't done any deep work on that. So Maybe you would look at Greenblatt's funds, ETFs as well. So his whole thing, S&P 500 is a market cap weighted fund. Greenblatt is really into value weighted, okay, a value weighted fund where the biggest position in the ETF isn't the biggest company, it's the company that has the biggest margin of safety. So that's something that might be interesting as well. Okay, with the risk of inflation, what are your thoughts about investing in gold or to expose to other stock for protection against inflation? I observed that Philtown, Howard Marks, Ray Dalio have a small amount of investment in gold mine/ETF. Yeah, again, inflation, it's not really something that I'm altering my portfolio over. It's not to say I won't in the future, but it's not something I'm really letting drive my investment process at the moment. What are your thoughts on investing in Chinese stocks other than BABA? Yeah, I'm sure, Charlie Munger says there's probably a lot more 100-baggers right now in China than there are in the U.S. So, based on that, I think it's probably a great place to hunt. Yeah. So, for those who are willing to do the work and really understand those businesses, obviously, if you live in the U.S. and you're looking in China, there's, it's more difficult. It's more difficult to really understand a business, understand the context of that business. But perhaps that work would be handsomely rewarded. I only own BABA, and I don't plan on buying any other Chinese company in the near future. Recently referenced that Nick Sleep and his partner own between them both the UK-based online fashion companies Boohoo and ASOS. As we are all aware, any Sleep holding takes on significance due to the minimal number of stocks he holds at any one time. Absolutely true. Boohoo exhibits many of the compounder characteristics: high return on capital employed, growing turnover and earnings, high level of inside ownership, and long runway. Would you consider putting out some content on both stocks, perhaps comparing them against each other? It would also introduce some UK stock exposure to your channel, which would be welcomed, especially with the UK market often cited as being one of the more attractively valued major markets for investors at the moment. I hadn't heard that about the UK market. I'm not saying that's wrong. I just haven't heard that. So what I did with Boohoo and ASOS, I have a few friends who live in UK, and I reached out to them and I said, hey, what do you think of these online fashion retailers, right? Boohoo and ASOS. And effectively, they both said, well, there's a lot of issues, ethical issues with those companies. We really don't think they're operating, basically in an ethical way, in a way that we're comfortable with, in terms of, cheap labor, and there's some issues. It sounds like ASOS is a bit better on those fronts than Boohoo. But again, hearing that and also knowing I'm not into fashion, okay? Fashion is outside of my area, my circle of competence, and my interests. Like, I just don't have interest in fashion. So because of that, it was an easy pass. But that doesn't mean that they aren't great potential investment opportunities. So, that's what I'll say about that one. Name two things you disagree with Pabrai and Warren Buffett. I'd have to think long and hard about that. I can't think of anything off the top of my head. Is Apple the greatest company on earth right now? Possibly. The cash flows of Apple are just insane. I would say Amazon might be a better company than Apple. I think the runway of Amazon is longer than the runway of Apple, based on what I'm seeing right now. And in terms of Amazon's business model of giving their cost savings back to the customer, really building for the long term. I think they've done that better than Apple has. What's with the huge hysteria created by Bitcoin, Ethereum? Is it a case of FOMO? Absolutely. And this is nothing new, guys. This happens in every market cycle. It just so happens that market cycles tend to be of a length that we get this whole new, fresh pool of investors coming in that are completely unfamiliar with the last market cycle. And so we get this same kind of behavior, the huge hysteria. People think making money is easy in the stock market. It is until it's not, and everything crashes. So, and I don't see value investors falling into that trap, okay? But value investors make up a very small sliver of investors, okay? Lee Lu says this. It's like probably less than 5% of investors are value investors. So, I don't see it in our community, but it is very much alive and well. And there's going to be a lot of pain as a result. It will change, right? It will shift, this whole thing. What goes up will come down. And then it's all going to happen all over again, right? Just it's amazing learning from people who have been in the markets for so long. Jeremy Grantham is one that comes to mind. Just listening to him talk about, previous crashes and, market peaks. It's really interesting just to hear the perspective of people who have seen this movie over and over again. So anyway, guys, that's all I've got for today. Thank you all for the fantastic questions, and I will see you all in the next video. Take care.